If you're like most real estate professionals, you got into the business for a bunch of reasons, but one of them was probably freedom. You kind of bought into this concept that you're going to be able to be your own boss, run your own company. You're going to have control over your time, which means you're going to be able to determine your own income. And then on day two, when you woke up, you thought, okay, there's a lot of freedom, but with that freedom does come a certain amount of responsibility. Today, we're going to give you a basic outline of what you should probably do with regards to planning ahead for your income and your finances. Let's get started. So the first thing I want to talk to you about is this horrible word that we call budget. I grew up in a household that was working, middle class, blue collar working, and there wasn't a lot of additional money floating around. You know, we didn't go without shelter or a house or food or clothing, but there was not a lot extra. And periodically I heard this word budget. And so I grew up under this misconception that budget actually meant deprivation. And budget does not mean deprivation. If you're a real estate professional, I want you to embrace the word budget. Budget is about estimating and allocating resources based on what your plans are and what your business is going forward. A budget is determining how much money am I going to need for certain things to make sure that I'm actually running a responsible business. Budget is not a foul word. Budget's a great thing. So when we talk about budget, what I want you to do is make some basic categories, either write them down preferably, or at least keep them in your head for a period of time. What are the categories that I'm going to have to spend money on when money comes into my business? All right, so number one, I'm not a tax guy, but you're going to have to probably pay taxes or at least make some provision for taxes. I don't know what percentages that is for you. I've worked with a lot of tax people in the past, a lot of tax preparation. I'm not a tax guy. Don't pretend to be a tax guy. I personally set aside about 30% of my top end revenue for taxes. Number one, got to pay Uncle Sam first, right? Number two, what is the cost of running your business? What are the software packages that you use, your telephone, your office expense? What are all the day-to-day operational expenses that are associated with your business? Me personally, I don't want that number to go above 20%. Got it? So now we have 30% to the IRS and 20% is going just to overhead operate my business. That leaves me 50% left, okay? I take 30% of that 50%, that's my personal income, okay? Per my own personal income, I want to make sure that I can actually put 30% of my top end revenue into my back pocket and run my life, right? These are all my other personal expenses. And then of course I got 20% left over. Guess where that money is going in my world? 20% is prospecting. 20% of your revenue, 20% of your top end revenue should probably be allocated to prospecting. Got it? Why? Because if you're not advertising, if you're not generating leads or paying somebody else to generate leads, then guess what? If you're not feeding the top of the funnel, it doesn't matter what all of these other expenses are, you're not going to be able to cover them. Got it? Taxes, operations, pay yourself, and marketing or lead generation. The next aspect of a budget is just that. It's a budget. It's an estimate. Now, there's going to be some times during your month where you're going to spend more money on operations and maybe less money on advertising, or maybe God forbid, you've got to reduce your personal income. I want to keep your taxes and your personal income at 30 and 30, and I really don't want those things to vary. I want you to keep them solid. You got to pay your taxes and you got to pay yourself. Okay, practical tip number one. Every time you get a commission check, every time money hits your checking account, I want you to divide it into those 4 buckets. You might do this on a spreadsheet. I don't care if you do it on the back of a napkin. At the end of the day, what's important about this exercise is top of mind awareness. When money's coming in, it's not a windfall. It's not winnings. I won. There's a commission. Believe you me, I did spend a certain portion of my life in my youth thinking like that. I'd have a huge amount of money in my checking account, and man, oh man, this is fantastic. Well, you know, the first business I started back in 2005, I had all this money left over in my checking account. Oh, that's just fantastic. Why? Because I had all kinds of expenses that I wasn't really accounting for, and then they ultimately just got me. And at the end of the day, I don't want that to happen to you. First tip, every time you get paid, I want you to have a thumbnail sketch. 30%, 30%, 20%, and 20%. taxes, personal income, operational overhead, lead generation. I know you can have all kinds of other categories in there, but if you just segregate that money in mentally in those 4 categories, you're going to be leaps and bounds ahead of maybe where you are today, or leaps and bounds of most of the other realtors that are walking around on the planet. This isn't punishment, but I want you to get out of the mindset that when you get a big commission check and it comes in that you've like I don't want you to have an emotional response to that. Maybe it's relief because you need the money, but at the end of the day, I want it to be a non-emotional thing. The money that comes in and the money that goes out is just a matter of doing business. And if you allocate these resources correctly to these 4 basic line items, you're gonna be doing just fine. You're gonna have to make changes along the way, but that is the whole point of allocating a budget. Okay, pro tip number 2, it's okay if you have to feel a little bit of pain. A little deferred gratification goes a long way when it comes to your long-term peace of mind. And here is where that's going to come up first. If you find yourself in a position where you're just not doing as many transactions as you need to do, and we take a look at your database and there's not as many people in your database as there should be, and you're not following up with those people in a meaningful and purposeful way so that when they transact, you're the guy. If that's not happening, what I want you to do is I want you to reduce your personal income and I want you to increase your marketing budget, because I want you to feel a little bit of discomfort associated with that. Now, not a lot. I don't want you to stop eating. What I want you to do is I want you to just really assess your personal expenditures and ask yourself, do I really need the new car? Do I really need the new watch? Do I really need the new suit? Do I really need this? Do I really need to drop $500 on dinner? Or, man, could I just maybe have taken that money and pushed it over into lead generation? Now, once you cross that threshold, you're going to be playing on a totally different level. You're going to be operating a business more like Warren Buffett, a little more like Warren Buffett and a little less like, Casino Royale. I know this is going to be difficult for a lot of us because I went into sales because I like money. I like to spend money and I like to have a great time. But I also know that, hey, there's a price to pay. And that price is almost always going to be centered around lead generation. You've been in the business for a while, so you know how to execute, you know how to take a listing, you know how to deal with buyers and show property. But if you're not filling the top of the funnel, then the whole thing's just going to go down. Give up a little bit of that personal income and spend a little bit more on your marketing budget. As is the case, we covered a lot of information in this video. If you need help with anything that we talked about, your budget, paying out bills, anything, if your discipline's kind of sliding off the mark a little bit, don't beat yourself up. Do yourself a huge favor. Just go get 15 minutes. Go grab 15 minutes on my calendar. I look forward to learning a little bit more about how you're running your business and helping you in any way that I can.